Hello, Jim here. Today I want to share with you how I've been able to make some really good extra income over the last month trading two different types of option wheel strategies. I'm going to go over in this video details about each. One is actually a monthly cash secured put type strategy, and the other is a weekly vertical put credit spread strategy. They're slightly different, and I'm kind of doing it as a test to see how I can do with each of these strategies. So they're smaller strategies within my different portfolios, and so far they've worked out really well. Along the way, I've also identified some additional companies that have worked well with them, so I'm going to share with you those new companies that I am currently trading on. And then at the end, we'll go over the spreadsheet. I'll share with you the trades, what my plans are for this next month, and how it's really worked out and what I've learned along the way. So I think you should stay tuned. It's going to be well worth your while. Okay, now this video is made up of two parts. One is, again, my cash secured put monthly strategy, and then the other is my vertical put credit spread weekly strategy. It's not every week, but it's more like every other week or every 12 to 14 days, something along those lines. But first, let's talk about the monthly cash secured put strategy that I'm running. And again, these are small strategies running within kind of my overall portfolio and my strategy for my overall portfolio. I want to see how these do. I want to see how they compare to a lot of the other types of trades that I make. And that's the main reason I'm doing this. And I've done similar situations in the past, but I never really stuck to it. So for these, I'm going to continue to do them month in and month out for at least 6 months just to see how it turns out. So for this one, I'm picking less expensive companies. I'm only doing them on monthly expirations. I will typically not do them on weeklies. If I see some great premium on a weekly, then I will do it. But typically I'm going to primarily do these on monthlies with my goal of, again, seeing how well I can do. Can I potentially do much better with this kind of trading versus, the other type of trading that I'm currently doing? In my last video, I talked about my go-to trade was typically 45 DTE, and then trading or managing the trade at 21. These will be a little bit different. Again, they'll be monthly. So as each month, as they expire or get assigned, then I'll make the trades for the next month. So these will be purely, strictly monthly type trades. So all of the original ones, and I've shared these in other videos, but they've all expired or I've closed them or they were assigned. Chewy, Square, and Twillo just kind of shot through the roof. So I ended up closing Twillo for dirt cheap, but they were all very successful, good trades, and I was able to keep all the premium. The only one that was assigned was Pins, and again, related to earnings, bad earnings, and it dropped big time, but it's slowly recovering. What I like to share with people, and even with both these strategies, I'm still sticking to finding good companies that are not overpriced. So what does define a good company? One that has not a lot of debt. The debt to equity is more like 50%, has good ROE, good ROA, is growing. If it's paying dividends, it's not paying too much. So the payout ratio is relatively low. And I'll go into Seeking Alpha here in a minute, and I'll share with you the latest one, or the new company or the two new companies that I'm doing this on. So the first month went really well, and then I opened a covered call on Pins. It took me a week or two to be able to open it up again because they missed earnings and it dropped so much. So now I have opened a covered call at 32. My cost basis is at 31. So right now, if it got assigned away from me, I would have made like 158 on it in 2 months. Now, if it expires, because I believe it's over 32 now, if it expires or I have the opportunity to roll this covered call for some really good money, I might also do that too. But my emphasis for this strategy is just to see how it works out with the assignment. So I very well might let it get assigned. Now, HIMS is a new one that I did, and it's already expired. This is the exception to the rule. It had very good weekly premium. So I did an 8-day DTE, and since then it's already expired. It shot through the roof. I believe it went over 30, 32. So I was able to keep the $208 that I made on it, which was pretty good return. I think 61% right here, yearly return on that one trade. So, and I'll probably look at doing more trades on HIMs. They're a little bit overpriced now, but not by a huge amount. We can come over here and look at them really quick, so we can make that determination. And where are they currently? Yeah, so you can see they shot up quite a bit, but and their PE is pretty high. So again, I like to look at some key information. They've beaten earnings, and they're increasing earnings pretty significantly. And you can see when they've beaten earnings, they've beaten it significantly. I like to see that. So it's a little bit easier for me to pay a bit more for a company when they have really good earnings. So growth, again, just like the year over year earnings, their growth is quite nice. Profitability, also good. All the things I want to see in a company. So they have good return on common equity, 26. I like to see it around, above 20 if possible. Also like to look at return on assets of 16 or 17. If it's in the teens, I really like it. So everything really fits. Last piece to look at is debt. So I like to come in here and look at debt. I'll come down to long-term liabilities. These are current. Here's long-term, no debt. It would have been in this row. So that's why I like to trade them. At 34, they've gotten a little pricey. At 63 for future earnings, if I look at valuation. And here you can see it's a little bit pricey. But that's where I believe they did beat earnings. When was earnings? 11.4. So they did beat earnings. That's partly why they went up so much. So just a good company. They're on my watch list, and I probably will do another trade with them. And my guess is they'll probably trend down a little bit, and I'll be able to make another one. So it also means I can look at other potential companies to make trades on. Bluebird is another one that I did for the second. The first time I did it for November, but it's the yellow school bus company, and I did this with a 35, expiring on 12/20. So it's right around 40 currently. So it's out of the money, but not by much. I think it got up to the low 40s and then dropped back down. But I was able to pick up some really good premium for both HIMS and Bluebird. I did 2 contracts. And for it was they were both right around 61 or 62%. So 2 good companies, 2 good stocks. Bluebird, similar picture. Again, you'll see. So they've been trending down a little bit, but they're not, their PE doesn't look too bad. But if we come over to earnings, so they're trending up, nothing like, 42% is pretty good. And they've typically beaten earnings by a fair amount. So just a well-run company. Growth, they're growing pretty well, all things considered. Profitability also looks good, very profitable company. Return on capital, almost 40%. Return on common equity, over 100. This is one of those scenarios I think about, should I buy 100 shares? Because if this shoots through the roof, I would have missed an opportunity. I missed that with APP. I did a lot of trades with APP early on, and I wish I had bought 100 shares. It's gone through the roof, even more so than Palantir. And in financials, I do believe they have more debt. So we'll look at the balance sheet, come down here and look at debt. So long-term liabilities, 90. So it looks like they had a lot more debt at one time. So 90 billion, I believe that's 90. It might be 90 million actually. So we come down to their equity. Actually, I think I passed it. 156. So they're pretty close to the 50 debt to equity ratio. So everything I like to see. So that's why I'm trading these companies. And it's last thing I forgot to look at is valuation. And they're not overvalued. You can see here it's all A's. So overall, just a good company. So just like with the others, if this expires, I'll look to write another one. I'll also look when we get to later this week or next week. I'll look to see if I can roll them and bring in at least the same amount that I made before, the 368. Again, these are for two contracts. Now, next I did FCX, and this one was also new. So let's look at FCX real quick. And so valuation, just since we're here, it's not, it's a little bit overvalued. We can also look at earnings. They beat earnings on 1022, but GAAP earnings that did not beat. But again, looks good. They're growing year over year earnings. Like to see that. Profitability, A plus. You don't see many A pluses for profitability. So they have good margins. They also have fairly good return on capital, return on equity. A little bit low on return on assets, but overall, and I think it's partially because of the type of company. I think they're an industrial company. If you come down here, you can see a little bit more. I want to make sure I think I passed it. It's right before these statistics. Seasonality. Well, hold on, guys. Let's see. I think it might be a little bit lower. Here we go. Company profile. Engages in mining of mineral properties in North America, South America. So they're a miner for different types of minerals. So a little bit different. You know, I do so much with chip makers and software companies. A little bit something a little bit different, which is nice. So again, I did two contracts. Didn't bring quite as much as some of the others, which isn't surprising. But 170 isn't bad. It's still like a 32% yearly return. And again, I believe they pay a dividend too. We can also look. They pay a dividend. And they do. 1.43%, really low payout ratio. They're growing it. It's only been a year, and look at how much they're growing it. So it could be a great potential to own a company that's significantly increasing dividends. So, you know, overall, just a good company. And just like the others, I did two contracts, and if it expires, I'll look at doing another one. It hasn't moved. I believe it's still, what was the price on it? 42. It's almost exactly the same price of when I made the trade. Actually, it may be a little bit higher, I believe, or yeah, it might be a little bit lower actually. So I might even be able to go lower next time and do like a 40. And then Fiverr, I opened this back 11/18. I only did one at $27. I use Fiverr. I use it for graphics. I use it for voiceovers. I use it for logos. If you're a graphics person or, you want to start your own business, I would look at Fiverr. Fiverr's a good way to get started. I use it more so than Upwork and some of the other. So I really like it. I use it all the time. I have a business account with them. But I did a 35 Delta at 27. And I believe at the time I think they might have been around 30. Brought in a little bit less, but again, this is one contract, 105. And on a yearly basis, it's like a 45% yearly return. So overall, total income, 1868. This is over 2 months. Interest, 192. So it's 2,060 total income for the 2 months, or 1,030 each month, which you can see here. It's almost like a 5% monthly return, which is pretty significant with selling options. If you could do this year in and year out, at a 5% monthly return or a 60% yearly return, if you use the rule of 72, you're doubling your money every year and a half, something like that. It's pretty substantial. I won't go into these in a whole lot of detail, but this just talks about, how I like to do these in particular. Next, I'll jump down and I'll talk about the weekly trades and some of this information. I've also picked a new company to do with my weeklies, or what I'm calling my weeklies. They're not literally every week. So let's take a break and then we'll jump into those. Okay, now here are my weeklies. I started these around the same time, just like before with my monthlies, I'm trying to get a feel for, is this a better way to do it, or is there a better way to trade options to potentially make more money? So far I've been very happy with these. I started out with Micron. This is Lam Research, and Qualcomm I did as a paper trade, but I might look at doing that as a full-blown trade. And then, so some of this is related to the Qualcomm paper trade, but it's now expired. It never even got near the money. So I started off, and then I ended up, all these in the blue means that they're currently closed. So I rolled the Micron. I believe I've rolled it twice now. So since I opened this on 11/12, then I rolled on a 11/21. So I've gone over the first three trades before, so I'll just stick with the roll. I kept the same strikes, 190. It was originally expiring on 11/22, so I moved it out to 12/6. I brought in pretty close to what I brought in the first time. So the first time I brought in 323, this time 314. And then it's almost like a 680% return, which is primarily because of the 10 DTE. So this one had a 10-day DTE. The required capital is this amount. Actually, this one is closed, but you can see it was very profitable, that trade. Then my original LRCX, I did roll it, but then it's expired since then, since we're already past 12/6. This expired on Friday. And it had a little bit of a shorter spread, 72.50, 65. I made 230 on it as the premium, and it had almost like a 474% return. Again, because of a very short DTE, a 10-day DTE. The required capital was 1770. And down below, I'm actually not using the required capital. I'm using the total value you would need to have in your account if they were assigned to you. But we'll talk about that next. Since everything blue here has expired, this is what's currently active. So the first one this is the new one, 4. And this is another, what is it? Not a credit. It's like a credit card processor, or they do payment services. So if we look over here, we can also look at 4. They also had good numbers. So I really like to reemphasize trying not to take big bets on companies that are really, really expensive. So they do have a 28 delta. I think if we go a little farther out, they're not as new a company as some of the others, but I mean, if you compare them to over here, they are a little bit pricey. But let's look at earnings. They did miss earnings recently, so they did drop a bit. But if we do the year-over-year earnings, you can see they are increasing. So they did miss earnings recently, but it looks like the rest of the year they're going to be bouncing and probably hitting higher highs. So let's also look at dividends. They may pay a dividend. Nope, no dividends. Let's look at growth, A+ growth. So as a payment services company, and I believe that's correct. We'll look in a minute. I may be telling you wrong about Shift4. I do know their CEO left recently to head NASA. I believe Trump is looking at him as being the head of NASA. So they did take a little bit of a dive recently because of that, because of losing their CEO. That is, I guess, if he's confirmed. He might not be confirmed. Profitability. So the profitability isn't quite as good. I do like their return on equity is good. Return on assets is a little bit low. It's more their profit margins could be better. Their profit margins are a little bit lower. And then valuation is a C, so they're a little bit overpriced, not crazy overpriced. Let's verify what they do. So we'll come down here. Bear with me, guys. Okay. Yeah, payments. Shift4 Payments provide software and payment processing solutions in the United States and internationally. So Shift4. I haven't tried them. I haven't used them before, where I have used PayPal and Square, and even some of the banking processors I've used. So I may give them a try to get a feel for what it's like. But so far the trade has gone well. They've gone up quite a bit. This I did this as 97.50.90. So again, a $750 spread expiring on 12/20, 27 delta. So I took a little bit less risk. Current price 103.71. That might have been when I made the trade. I brought in pretty good premium on two contracts, 255, and it's like a 468% return. Now that it's lower because it's 16 days to expiration versus some of these up here were 10 days. So it's worked out quite well. Next, I rolled Micron. Micron's just, I don't know, it's like what Zoom used to be a year ago or 2 years ago. It's just got lots and lots of premium. So I rolled it again out to 12/13. I've only been rolling it on a weekly basis. So didn't go out as far. I guess this is more like 2 weeks. Brought in 204 for two contracts. And this is also like a 260% return. So didn't quite do as well as I've done in some of the other rolls, but still overall doing fairly well with it. Vertical put credit spread on AMD. Now I currently have a trade with AMD that's a bit in the money, 140, but I decided to do another one. This one's 135, 120. At the time it was 138.15, expiring again on 220. I brought in 261 in premium, which equates to like a 392% return. And here you can see these are the required assignment allowance. So how much I would really need if they're assigned to me. And you'll see that the number crunching down below is based on that. So I brought in 2156 and I literally started this on 11/12. So I haven't even been doing it a month. I'll probably roll one or two more this week and made 2165.76. Plus I earned some pretty good interest on this value. So that's what, if all were assigned at the same time, that's what I would need. And then the monthly income when you combine these two is 2404. So I've made 2404 in the month. So on a yearly income, that'd be almost 28,000, almost 29,000 really, or 28,857. So the total required capital was 12,834. But again, if you're playing the wheel, you need enough cash to be able to handle assignment. So this monthly ROI is actually based on this 65,000. So it's like a 3.66 monthly return, which is 43.87 on a yearly ROI. Now, if I based it on this amount, you could see it would be significantly more. It would almost be 5 times more. So, and you could potentially do more trades if you wanted to. If you were okay with half that return, you could potentially do, half the number of trades. But even a yearly ROI of 43, almost 44% is pretty significant. Now, combined, these two are really interesting. So the total required capital was 33,385, and that's the 25,000 or 22,000. That's this value combined with this value is how I came up with this one. And then the 33 is this plus the 20 above. Because you need everything for a cash secured put, or you need enough to cover the entire amount of the shares. So that's how I came up with these two different values. And the total income for the two accounts is 34 and 95 cents. And then the monthly ROI on the required capital would be like 10%, which, again, I will compare like to like, so sometimes I will do the required capital. But if you're running the wheel and you're taking a higher risk, this is the more accurate number. You really need enough cash to cover an assignment. But again, so far I've only had one assignment, and I think I've done 10 or 12 trades. Let's see, that's 4. I've done 8 of the weeklies, and I've done 10 of the monthly. So I've done 18 trades, and only one has been assigned to me. And then this would be like a week. Well, using the full amount, this 86,000, it's just shy of 4%, which is really good. And on a yearly basis, that's 48%. So again, the rule of 72, you'd be doubling your money every couple of years. So what have I learned from this? It's the hardest part is finding good companies. It's a lot harder to find companies that have really good premiums. That's why I picked AMD, MU, and all of these are a little bit higher price compared to these monthlies that we have over here. You can see the strikes are much lower. Not so much for Twilio or Square anymore, but it is a little bit harder to find weeklies. And it definitely is a little bit more work. So that's what I wanted to share with you guys. Let me know what you think. Are you doing any kind of a strategy like this? If I've confused you, please leave a comment down below. I typically try to answer all my comments. And as always, thank you for taking the time to watch, and I look forward to seeing you next time.